Welcome back to Fast Market here on the Schwab Network. It's time for cash tags. For that, let's bring in our next guest. It's going to be Andy Swan, the co-founder at LikeFolio. Welcome back to the show, Andy.
Thank you.
All right, so we're talking Maple Bear, Instacart's parent company here. Stock just off all-time highs. It's had a great run, Andy. Do you have the data that backs this up going into earnings? Because the bar is high on this one.
Yeah, the bar is very high, and we do have the data to collaborate with that, to corroborate that. You know, I think one of the most important or most interesting findings we had is just looking at online grocery market share in 2024 in terms of percentage of sales, and to see Instacart right up there with Walmart, with Amazon, above Kroger, above Target, really speaks, I think, to the popularity of Instacart, because those are some pretty big brand names to compete against, and to already be in third place is a monumental achievement. And when we look at the change in web visits or the change in app usage, you know, we see why Instacart users are using the platform more often, whether it's on the web or via the app. They're dominating the competition in terms of that growth level. And the bottom line is people are really buying into the Instacart value proposition, which is, you know, grocery from the touch of a button from your phone, and we'll deliver the groceries to you so that you don't have to fight people in the store, or, all of the negatives that are associated with grocery shopping. And so I think Instacart has made a lot of people's lives easier. It seems like the more people they get on the platform, the more people love the experience and get addicted to it. And so Instacart's in a really good position here. The brand is strong. The consumer experience is strong. Their technological achievements are growing, and I think that's an underrated component of this story. And so we think Instacart right now is probably really fairly priced, even though the stock has doubled over the past year, like you said.
Andy, you know, we talk about these grocers a lot, and it's a tough business, right? It's low margins. You're fighting against Amazon. There's a lot of reasons. You're fighting against Walmarts and discounters. However, this might be a new interesting way to play the grocery sector as a proxy, because the margins on Cart and what is it, Maple Bear?
Yeah.
God, get a new name, Maple Bear. But I mean, the margins and what this company has, it's kind of a different vibe on the grocery sector, isn't it?
Yeah, it really is, because if you think about it, there's only so much, Walmart can charge for a pound of apples or for a box of cereal. It's got to be very competitive with Kroger or even a slightly higher end solution like Target, and they can only make a very small percentage on each sale. But what Instacart can do is say, hey, if you have the wealth or the resources to afford grocery delivery, then we can just tack on 50 cents or $1 per item, and it's really not going to bother you. So they have that massive advantage, that privilege of understanding that their client is willing to pay more for groceries. They don't have to compete so that anybody that walks into their store can afford things. And so they can essentially take margins on grocery that others simply can't. And it's a really powerful spot to be in. And so I think Instacart, finally found something. I think we all remember back in the .com days, there were grocery delivery companies trying to pop up left and right. Some of them went public. They all went bust very quickly. It was a good idea ahead of its technological time and the ability to get the logistics right. But Instacart is now here, the right idea at the right time, and performing and executing really well.
One question for you here, Andy. On your monthly active users, you got up 44% year over year. But then I look at the chart, maybe, from the past few months, it's kind of leveled out. Do you see that as maybe a headwind for this stock, or is this just maybe a reset because it's happened that way before in the past, where it kind of levels out for a few quarters and then rises on this?
Yeah, I think that it's a great question. I think there's a seasonality effect to this, and I think through the holidays when people get busy and into the new year when people reset priorities, Instacart generally gets a really nice advantage and starts to see that year-over-year growth ramp back up. It's the late summer months and fall when things tend to flatten out and they aren't bringing on so many new customers. But during the holidays when people get busy and people are hosting and you just need something brought to your house real quick while you're trying to cook this dinner and you don't have time to go get the groceries, Instacart is there for you, and they do a great job of advertising and capturing customers during that time period.
Andy, you guys have a score on this one going into earnings?
Yeah, we're neutral on it, unfortunately, but it does speak very highly of the company that we can be neutral despite a doubling of the stock price this year. So we think the company's priced about right. It'll be all about the outlook, which we think is probably going to be positive.
Yeah, you guys on holdings yesterday, same thing. Stock had rallied up so far that Megan said you guys were relatively neutral on that. Stock just down a little bit too.
Yeah.
A bar is high on this one. All right, great stuff as always, Andy. Have a good day.
Thank you, you too.
All right, that's Andy Swan, co-founder at LikeFolio. One of the things that, I don't know if they have data metrics on it, but advertising now makes up 28% of their total revenue. So they're expanding in that realm.